Hey guys, welcome. Jay here, smarthelping.com. Happy Monday morning. I've got a financial model template here for royalty licensing fee comparison. So the point of this is to figure out the true value of a licensing agreement that's based on future sales. You see this in all kinds of businesses, all kinds of industries. So it's not specific to any one thing. It's just a general model. And we'll go through it. There's only two tabs. You got the model tab and you got the visualization tab. You got two visuals here. You can analyze up to 50 years of time. You start with putting the expected monthly sales, the fee per sale, and the percentage fee per sale. Now, what does this mean? Well, these are mutually exclusive. And what this is saying is every sale, either you're going to make a flat fee or a percentage of the sale. And the whole point of this model is to compare the two values. Well, you also want to see just in general what the potential present value of either of these would be in and of itself, but this model goes a step further in comparing the two, as well as you'll be able to compare actuals when you actually start earning the licensing fee and see what that looks like compared to the forecast. So let's say we want to analyze a 10-year licensing fee contract. Starting sales, 5 sales per month. And we want to do, let's see, here we're saying that the average value per sale starts at a certain level and it can go up over time or it can stay the same. It depends. And then we have the growth of the unit sales that can also drive you know, for the flat fee amount, this would make the difference in the total revenue per month in licensing fees versus a percentage fee would change based on that volume, sales volume, as well as the value per sale. So that's why they can be different. Okay, so and this gets very interesting because you've got a couple factors at work here. If you're taking a percentage fee per sale, okay, you might it might be worth more per sale in the future if whatever you're making money on gets a price increase. But the flat fee might give you higher earnings initially because this flat fee might be a higher percentage of the total value at sale at the beginning compared to whatever this percentage is. And we can see that right here in this model. This whole time the percentage is less, 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 less. Then in month 6, now the percentage model version is worth more per month. But you have to weigh that with the time value of money as well. So what's that worth now in the future? Because it's more in the future, but less now. So that's why you got the present value here. It's saying the cumulative present value is still higher for the fixed fee per sale, even though the total raw amount is higher. Um, well, if we go here, we're getting to 2,900 for fixed, and percentage is less, which makes sense because here, this money you're getting earlier is worth more than this money you're getting more of later at the moment. So your licensing fee percentage is total worth 4,900. The dollar per sale is worth 5,000, and the present value is also higher on this fixed fee as well. Now, if we ran it for, let's say, 25 years, same assumptions, but we're increasing the value of sale, now at some point there's a cross here where the present value starts to eclipse on the percentage per sale. So now these increases in your revenue or earnings in licensing is higher than the fixed fee, and the present value starts to get higher too, and that's happening around the 10-year mark. Well, about 160 months roughly. But you can see all the data here by month. I also analyzed it by year here, and this is what's going into the chart you see over on the other tab. So all the simple flow is here. This section is showing the expected sales. This is showing how much you earn on those sales as a percentage of sale, if that's how the agreement's set up. This is showing what you would earn if it was a fixed dollar per sale. So for this fixed dollar per sale, all that matters is the unit sales count and this input. But for the percentage of sale, what matters is the total sales volume over time, and this percentage, total sales volume, is based on the units sold per month and the average value per unit. So this is driving the percentage. This column is simply driving the fixed fee. And we see the actual, so here's total sales. Here you can see licensing fee percentage. So this is your percentage fee. This is the present value of that, and this is just the cumulative present value. And these two columns on both of these aren't super necessary. You can still, I think they're good for more advanced analysis, but at least column I here and L show you the total value of the two different royalty streams, which is more, which is less over time based on your assumptions. And then the present value is a little bit more of an advanced look at it, but still very important for royalty analysis to figure out what makes the most sense. And again, it's going to depend on your assumption about the future sales, how much the unit sales are, what the percentage of the sale is, how much the sales actually are going to change over time. You got your discount rate up here. This is how you're actually figuring out the present value. So this is the annual rate. We've converted it to monthly to get the actual most accurate present value calculation that we could do. And then, yeah, you can put in your actuals here to compare if you wanted to. And then that will also show on the annual comparison here. So you can see actual, dollar per sale version, percentage version, and then unit sales and sales revenue. So this is your main summary look here, where you want to get a high level look at what's happening on the monthly. So this template it's pretty simple, but I think very useful for anyone in royalty licensing analysis. And the main drivers, again, are going to be what your forecast is for the future, and then what your discount rate is, and the discount rate is a measure of risk, which is a higher discount rate means you're less sure about the future cash flows. A lower discount rate means you're very sure about the expected future cash flows. And usually you can use a weighted average cost of capital calculation to figure that out. Now I've done a model for weighted average cost of capital that walks you through every calculation. It's pretty complex to figure out the you've got cost of equity, cost of debt, and you've got a lot of calculations within that you can break down. So, but it's really good to go through that method to figure out a reasonable discount rate for the industry you're looking at. Okay, so that's it for this one. If you want the template, it's a one-time fee of $45. You can get it in the description box below in the link. It's at smarthelping.com. I will post this under the accountant tab, where it will be in the calculators. in here and here's the weighted average cost of capital I was just talking about. You've also got cost segregation study stuff in here, a lot of cool calculators, cash conversion cycle. So I'll put it in that section. It'll also be included in the whole bundle of accounting templates itself, which you can get for $249, and that includes all of these templates, or you can buy them individually, ranging from $45 to $75. And don't forget, guys, if you want to get all the financial models I've ever built, you can check out the Super Smart Bundle here on the sidebar. All models, the Super Smart Bundle. And this includes all the financial models on the entire site for $9.99. And that's going to give you tons of logic. I've got models for the SaaS and recurring revenue space, a lot of real estate models and deal analyzers, industry-specific startup financial models here, joint venture waterfall distributions. Now, this could also be a pretty good source if you're doing royalties where it's a joint venture and the, well, that'd be quite a complex case, but this splits money between essentially a GP and an LP, or two parties that have an agreement to share cash based on the investor leg reaching certain returns hurdles, and then the cash is split differently as you get through the hurdles. Business valuation tools, accounting templates I just showed you, HR management tools, Google Sheets tracking, architecture, sales pipeline dashboard templates, and all sorts of things. um, there are template discounts as well, guys, based on bulk. The pre-built bundles are discounted way more than this, and then obviously the Superstart bundle is the biggest discount. You can see all the template bundles right here on the sidebar. It's all template bundles link. All right, that's all I got for you on this one. Happy financing, and I'll see you on the next one.